Welcome back to the channel, everyone. Today I'm going to be talking about the CCIV stock and giving you my updated stock price prediction. I'm also going to be telling you why the stock price crashed so significantly on Friday, and I'm also going to be talking about the recent Bloomberg article that was released on Saturday confirming that the CCIV merger could happen on Tuesday. Well, if you followed my call a little while ago, you bought CCIV when it was around $18, and therefore this fall isn't really too much of a problem for you. You're still significantly in profit. But what about if you bought in the $50 region or the $60 region? What should you do? Should you sell your stock as soon as you can, or should you hang around for a little bit longer? Well, stay tuned and let's make some money. Well, let's start by talking about the recent price action of CCIV. On Thursday, the stock hit new highs of around $65 per share, before falling quite sharply just before the closing bell. On Friday, we opened a little bit higher than that fall and traded around the $60 mark all day. But just before that Friday bell, the stock fell dramatically to around $52 per share. So why did this happen? Well, firstly, there were a lot of in-the-money call options that expired on Friday. A lot of these call options would have been bought by regular investors like you and I. Someone has to take the opposing side of this trade, the option writer, if you will. Usually, option writers are large institutions and market makers, although regular people can be option writers as well. An option writer basically creates the option and collects the premium. But if this option expires in the money, the option writer has to go into the market and buy these shares and give them to the option holder, or give them some of the shares that they already own, depending if it's an uncovered or a covered option. Therefore, these market makers and institutions want the options to expire out of the money, or if they do expire in the money, they want the price to be fairly low so they don't take on too substantial of a loss. Therefore, if a large institution already had shares, they might have sold them all on Friday just before the close to try and force that price down. Or if they didn't hold any shares but they had written options, they might take out a large short position to really try and hammer down that price so that they don't have to pay out and buy those shares. In the after hours, the price rose back up to around $55 per share. Pre-market Monday morning, I'd expect the stock to open a little bit higher than that, maybe around the $59 mark or $60 mark. But it could open even higher, considering the recent news that we just had from Bloomberg. If you're enjoying the video so far, be sure to subscribe to the channel by clicking that red button down below to benefit from in-depth analysis on new, up-and-coming stocks, regular news updates on fast-moving stocks, and expose-style videos to help save you time and grow your stock portfolio. Also, be sure to check out the link to the Patreon down in the description below to become part of the team and discuss stocks before they start blowing up, like GSAH, CCIV, BNGO, and even more. You also get access to my stock portfolio, which is updated daily, weekly live streams, one-to-one access, and more. But for now, let's get back to the video. There was a Bloomberg article released yesterday, Saturday the 20th of February, saying that sources close to the deal confirmed that the deal could be done early next week, potentially even on Tuesday. They also noted that the deal is going to be valued at around $15 billion, not at $12 billion like we first thought. I personally think that the deal will be announced on Monday, on Merger Monday, or on Tuesday as suggested. And this is really good, and it's what we've all been waiting for. But I also want to talk about this change in valuation and how it affects your stock. So the deal value has reportedly increased up to $15 billion from $12 billion. But CCIV is still going to only be putting in that $2 billion that they raised from the IPO. That means that either the PIPE investors are putting in more money, or the original Lucid Motors shareholders are being given more stock. Now at first glance you might think, well, that's great. The deal is valued higher and therefore Lucid Motors is worth more, and surely my stock is going to be worth more as well, right? Well, that might not be the case. The Lucid Motors deal was originally valued at around $12 billion. CCIV would be putting around $2 billion into that deal, meaning that the current CCIV shareholders would own around 16.67% of the post-merger company. The CCIV market cap at around $53 per share is around $14 billion. Assuming no dilution, that means that the market cap of the post-merger Lucid Motors would be around $84 billion. However, the Lucid Motors deal is now valued at around $15 billion, but but CCIV will still only be putting in that $2 billion into the same deal, and therefore the current CCIV shareholders will only own around 13.3% of the post-merger company. Again, assuming no dilution, that means that the post-merger Lucid Motors will have a market cap of around $105 billion, which is huge. Remember that this is also calculated with a current CCIV share price of around $53 per share. The stock is likely to jump on Monday or Tuesday on announcement to say $70, $80 or even higher, meaning that we could have a 50% to 100% raise in the share price in the near future, meaning that the market cap would also increase by 50% to 100% to $150 billion or even $200 billion for a post-merger market cap of Lucid Motors. If you want to pick up some shares in CCIV before that merger is announced on Monday or Tuesday, be sure to sign up to Freetrade using my link down below in the description to get a free share worth up to £200 when you invest a minimum of £1. Yep, that's right, you only have to invest £1 and you will get a free share worth up to £200. Also, be sure to check out the link to my Patreon down in the description and become part of the team. I told you in my previous video that I couldn't justify Lucid with a market cap of $80 billion. I couldn't justify Lucid with a market cap of $100 billion. And I certainly can't justify Lucid with a market cap of $150 or $200 billion, considering they haven't even started to ramp up production of their Lucid Air. They might struggle significantly to ramp up production just like Tesla did. Their expansion plans might fall behind and their research might fall behind as well. There's 1,000,001 things that could go wrong for Lucid Motors that would take time and money to resolve and could affect their overall company performance. So what should you do with your CCIV stock? Should you sell it Monday morning as soon as the market opens, wait until the announcement, or hold for the long term? Well, I guess it kind of depends how you invest. Are you a long-term investor wanting to hold Lucid for the next 5 to 10 years, or are you much more of a short-term trader? I personally think that the CCIV stock will fall after the announcement when all the hype dies down. I've seen a lot of polls on Twitter that are saying around 50 or 60% of the current shareholders are going to sell their shares straight after the announcement. I think this could cause a huge drop and a lot of the hype to die down as all of these investors and short-term traders are going to be moving on to the next big SPAC like GSAH, PSTH or even more. This, I think, could cause the stock price of CCIV to fall steadily until the actual merger. But in the long term, I think that Lucid Motors will do great. They're US based, they've got their expansion plans set, they've got their own niche, they're planning on supplying larger automobile manufacturers like BMW, Volkswagen, Ford and others. Their technology is great and so much more. In the long term, say over the next 5 or 10 years, I think Lucid Motors could have a market cap of $500 billion or even more, just like Tesla, when they're making and distributing hundreds of thousands of vehicles a year, again, just like Tesla. This would give them a share price of around $250 per share. But at the same time, if the CCIV stock does jump to $80 a share and then fall to $40 a share and then rise steadily to $250 per share, why wouldn't you sell your shares at $80 a share and buy back double the amount at $40 a share? Because that means over the long term, you'd literally be making double the amount of profit. But at the same time, don't think that I'm trying to convince you to sell out all of your shares right now. You really kind of need to trade on gut feel at these times because CCIV is trading entirely on hype and not on any fundamentals. If you want to sell your stock, then sell your stock. If you want to hold for the long term, then hold for the long term. Go with whatever your gut is telling you to do. After all, I'm not a financial advisor and this isn't financial advice. I'm just some guy that makes videos and puts them on the internet. And as always guys, if you enjoyed this video, then be sure to check out some of my others. Alternatively, subscribe to the channel and ding the notification bell because that way you'll be alerted when I upload a new video. Cheers!